Welcome, everybody, to this week's podcast episode for the Financial Freedom Podcast. I'm your host, Dr. Christopher Liu. And as we talk about 4 different types of freedom: financial, time, location, health freedom. In that light, I'm always bringing on guests to talk about their various strategies. So today we have a guest. Her name is Lynette Zang. An interesting backstory. She's from ITM Trading. And today's we're going to be talking all about the markets. I'll let her introduce herself and welcome her onto the show. Lynette, welcome.
Thank you for having me, Chris. I'm very happy to be here. And a little bit of back, I really feel like I have been groomed for this moment in time because I've been in these markets on some level since 1964. But I've been a banker, a stockbroker. My uncle was, and this is really significant. You never really know until you have enough age and you can look back on your life and go, oh, that's why that happened.
Yeah.
But my uncle was actually a major antique dealer back east. So even understanding, he taught me how tangible assets, fine tangible assets, go from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation, and in a constant loop. And that's why I said I've been doing this on some level since 1964. I've been at ITM since 2002, but critically, as a stockbroker with Shearson I was number one, I was there on Black Monday. And also, though, I started studying currency through the use of non-dollar denominated bonds, which are just bonds that are issued in different currencies. And at that capacity, I got to talk to the head of currency trading at Shearson. And I'd go home at night and I'd study. And in the morning, that was my first call. And we'd discuss what I had learned. And so I feel like I have learned about this from the best. But this is really interesting to me because everything has a life cycle, right? I'm at a different stage in my life cycle at 68 than my grandson at 9, right? But that's true for currencies as well. And so in the study of currencies, I saw these patterns and they're repeatable. There are some things that just happen 100% of the time. And there are more than 4,800 currencies that no longer exist, but exhibited exactly the same patterns. In your field, you're a doctor, that's what you're looking for, right? And then that tells you what's going on with the patient because you see these repeatable patterns. It's true with currencies as well. This is 1 million bolivar from Venezuela. Do you know what you can buy with 1 million bolivars in Venezuela?
Probably nothing, right? It's total paper.
Exactly. Has more value to wrap an empanada than it does in terms of purchasing power.
Interesting. Yeah, we could take this so many different ways.
Yeah.
We talk about patterns that you see. What are some of the common things?
Number one, this is 100% of the time, wars always accompany currency regime shifts, 100% of the time. And I'm not really so much referring to the war between Russia and Ukraine. I'm also looking at the patterns that are developing between the conflict between US and China and in the Middle East and between Turkey and Greece. There are a lot of conflicts that are arising after a pretty long period of especially the large powers getting along. So that's one thing. Another thing is there's always some kind of civil rights, whether it's women's lib, Black Lives Matter, and back in the 70s, there was women's lib. I know, I was part of that. And back in 1913, rather, when the Federal Reserve was born, we had the suffragette movement, didn't we? There's always something to do with energy. I can remember the long lines in the 70s, and we talked about being energy independent and all of that then, and they squandered all these years. And let's see, there's, inflation, high inflation, because inflation is really the value, the purchasing power value of the currency degrading. And you know how they keep mentioning that hasn't happened since going back to the 70s or going back to the 80s or even going back to the 30s. What they never say after that is when the currency shifted from at least a quasi-gold backed currency to a debt backed currency. Now we're going from a debt backed paper currency to a programmable digital currency, which should scare everybody. It scares me.
It's interesting because it's subject to digital currencies, and it's very hard to describe it to the average person because the average person, they just want to take their dollar and spend it. And people don't really understand what a currency is and
Don't.
this idea of purchasing power, which is interesting because with Bitcoin and Ethereum, and we recently, I think Gensler, he's actually hasn't done his job. He held these fiascos this year. And now they want to consider a central bank digital currency. So there's like all these, and nobody knows what's going on. But what are your thoughts on this? Because they said Bitcoin is supposed to be an inflation hedge, but it's not. It's now it's like 15,000, 16,000. It should be 100K, 200K. So
Should it? Why? Tell me what its functionality is. So here's my opinion about Bitcoin because I've actually been paying attention and watching it since it was $7. First of all, in 1996, the NSA, which is a government agency, came out with a white paper on how to make a mint. And they were referring to the digital currencies. And if you go back, anybody can search that. It's online. You can find that pretty easily. 1996 NSA white paper, how to create a mint. You will notice that so much of what they outlined and wrote about in this paper is what we see today, particularly in January of 2009. That's when Bitcoin was born.
no, it was October 31st,
No, it's
2008.
October 31st. Okay, according to the data that I'd seen, it was, but that's okay. We're splitting hairs. That's okay. Let's say it was October 31st, because then what happened in March of 2009? QE, the first time they did QE. I don't think that's a coincidence because the one thing that they don't want you to own is physical gold. They don't want you to own this because when you own it, it basically disappears, right? You hold it, you own it outright. Then when they know how to make these transitions from one currency to backing to another, and the way that they do that is they keep things as normal as possible. So they needed adoption, right? How do they get adoption? They let the public make a lot of money and get lots of eyes on it. So you've heard about the Roaring 20s. That's when they started converting us into a consumer-driven economy. And that's when the first time that consumers were given credit. And so they wanted to participate in the stock market, and everybody knows what happened in 1929 and then again in 1933 when they took the gold out of our hands so we could no longer hold government's toes to the fire. Then we know about the greedy 80s as well, right? During that period of time. So now we had this crypto craze. But they have gotten 16%. The most recent data that I saw on this was that 16% of the adult population in the US had at some point owned or purchased or worked within cryptocurrencies. That's plenty of adoption since you only have maybe 3% of the public that owns gold. And I'm not talking about a wedding ring. Maybe it's a little bit more, but that's just what piece. Getting people to adopt this new technology was critical. So my opinion is that this was a plant because all the money that went into the crypto, well, not all of it, but a chunk of the money that went into cryptocurrencies would have gone into gold because it's the same kind of mentality. Why, unless you're being a trader, why are you buying cryptocurrencies? Because as you said earlier, as an inflation hedge. It's only been around since 2008. October 31st, 2008, gold has been money for 6,000 years. Yeah, that's my opinion on cryptocurrencies. But you also made another statement, and I'd really like to address that too. And that is that people don't really understand what money is. Money was originally developed as a tool to enable a society to specialize. So you have doctors, you have lawyers, you have bakers, you have farmers, and they needed something to ensure that people would be fairly paid for their labor. Gold is a labor-based currency, right? Takes energy and it takes time and labor to pull it out of the ground. So when you were dealing with gold, you were trading this labor for that labor, which is a very fair exchange. But it really gave the power to the people. Because if you did not like what the government was doing when we had a gold-backed currency, you simply went into the bank with this. Actually, here, this is a gold certificate. Okay. You went into the bank with this and you walked out with this. Yeah. This is the $10 gold piece. Okay. And you walked out with this. Therefore, you pulled the gold out of the system and created fiscal limitations around what the government could do. No, they did not like that. So they took it away from us in 33. Then we were on purely a fiat system. This is a Federal Reserve note. A note is a debt instrument. This runs counterparty risk. This runs no counterparty risk, right? You hold it, you own it. This is all risk. They want you to think it's risk-free, but by design, it has inflation built into it. And they actually did this for two key reasons. There are many other reasons, but two key reasons. For the government, they wanted to be able to tax you without you knowing about it. They built inflation into the currency, and voila, they get the money when they issue bonds. They get it first when it has the most value. By the time it trickles down to you, it has a lot less purchasing power value. For corporations, they wanted to pay you less. But if you were used to getting $10 an hour, you were not going to work for $5. However, if they could make that $10 spend $5, you didn't know it, you were happy, and that's what enabled income and wealth inequality. So the other thing I want to say about this is they regulate the rate and speed of inflation. That's the big experiment, using interest rates. So they can attack your purchasing power, and officially there's only 3 cents left out of the original dollar's worth of purchasing power. That's according to the Federal Reserve. But nominally, you still have a $10 bill, right? Now, because there is virtually no purchasing power left in the currency, they have to attack your principal. And that's what negative rates are about. And they ran that experiment in Europe, and it didn't work so well, right? Didn't stimulate that. But once we go to a CBDC, which I don't even have anything to hold on to, once we go to a CBDC, that is programmable. And if you go to the IMF, the International Monetary Fund, and you read some of their documentations, they tell you that there will be no limitation on how low they can push interest rates once we have that programmable money. And you talk about a social score. If you disagree with them, they can just, boom, cut you off. So this is a great way to attack your principal. But recently, when I was doing some research, I came across something really, for me, extraordinarily disturbing. Originally, money had 4 functions. It was a tool of measure, a tool of barter, a short-term store of value. So you could always, these 3 things, so you could always be fairly paid for your, you could be fairly paid for your labor, and a long-term store of value. I can't tell you when, because I don't know when they did this and I couldn't figure it out. But they eliminated that 4th one, a long-term store of value. More honest, because obviously if inflation has eroded everything. But when they go to the CBDC, and they have actually, it's in their documents, they eliminated the third piece, which is short-term store of value, so that you're fairly paid for your labor. So that when you do get paid, it goes into that account that is immediately issuing negative rates. So you are not being paid what you think you are being paid. And that's true nominally, but with the CBDC. So this new money, the CBDCs, will have two money functions, which is simply as a tool of measure. Okay, this costs $10, tool of measure and a tool of barter. And I'll give you $10 and you'll give me this. And that's it. And what they're talking about, because this is a big deal for me, is what's going to justify creating the money. And I was afraid that this is what it was going to be, but they're talking about commerce, right? So if you buy something, new money's created. Please tell me how much value that money will have. I know I just dumped a lot, but there's a lot here.
So what your question was, once that money is created, I didn't really follow your.
Okay, so if something is easy, if a medical degree, if anybody could get a medical degree, it was just easy to do, right? No big deal. One of my daughters is a doctor. I know how much effort and time and money it costs to get that degree. What if it was just $1 and anybody could pass the tests? It would have no value. So it's the same thing with money. If money is cheap and easy to create, which it is right now in the debt-based system, but they're about to make it even easier and cheaper in the digital system. So you will buy stuff and create money that way. It has no value.
Yeah,
that makes sense?
Yeah, interesting. Because the thing with the CBDCs is now you can buy it, because in the past with the bailouts, you had to get it from banks, lending and credit institutions. But now they're trying to plan it so that it lands directly in your bank accounts, which kind of eliminates that time. But then it can be used as a surveillance measure, because they can track where all the dollars go. But then also they can program, for example, if this dollar is only for the purpose of paying rent or paying food, and you try to go buy cigarettes or alcohol or some other thing, it's going to not allow that. But it's quite interesting, because especially with the rate, because the last 14 years or so, the cost of capital has been really cheap. So it was like,
right,
basically cash was trash. So that's why people gambled and speculated with it. And now they reversed 14 years of what they did in less than a year. And so that's making the cost of the dollar a little bit stronger. So it's really, you see these problems with centralized entities, and where there's not a free market and you have government or intervention and bailouts. And then it's basically corrupt money, because they can manipulate.
100%.
Most people don't understand this. They just go about their day and
right.
knows. But it's quite an interesting conversation.
And an important one. I know how hard my daughter and son-in-law work. I know how hard I work. I want to be always fairly paid for my labor, no matter when it is that I want to use it. And I don't want anybody telling me how I can use it, or that I can't use it at all, or that it has, if you don't spend it by this date, it goes away. And that is where we're heading. And it's, based upon repeatable patterns. My original strategy, I developed a strategy based on that. And I did that before I went to ITM in 2002. That's the basic strategy that we now use for everybody, because, again, I can't guarantee what's going to happen tomorrow, but I think if something has happened the same way 100% of the time, and we're essentially doing the same thing, I'm pretty sure this time is not different. And you make such good points in the surveillance piece and the ability to really dictate what you do.
Yeah.
You disagree, and that's a button push. That's so easy.
Yeah.
So easy.
Yeah, it's quite interesting how the institution of money and the paradigms and the frameworks in how we view money. Is there's a battle. It's between central banks and governments and the populace. And so it's going to be really interesting to see how this plays out, especially with the role that, Bitcoin and Ethereum, some countries may adopt it, countries may ban it. It's going to be very interesting.
Oh, yeah.
And like I said, then there's going to be alternatives to the US dollar. So then basically countries are trying to get off the US dollar so they don't have to depend on us, that they can go about without us meddling in their affairs. Overall, it's a battle between politics, capitalism, everything. So it's going to be very fast.
Oh, it is really fascinating. And I'll throw this out at you because I think I was about the first person in my space to start talking about a reset. But I did that in 2009 after Christine Lagarde, who was the head of the IMF at that time, International Monetary Fund, did a Bloomberg interview. It was maybe a 20-minute interview. And during that interview, she probably mentioned the word reset about 30 times. And I went, okay, they're telling us we have to reset this, we have to reset that. And then China actually went, what about the SDRs? Now, the SDR, it stands for special drawing rights, and all it is a name, just like the US dollar is a name. But it is the money that is created at the International Monetary Fund, and it's a basket of currencies. It was first developed in 1969 to actually take over as the world reserve currency from the US dollar, because in the 60s there was a run on the dollar. But Kissinger went to Saudi Arabia, created the petrodollar. That means that if you were buying oil or anything outside of your borders, you had to use dollars to do it. And so that created artificial demand for the dollars, but we retained that status. With what we're going through right now, the IMF's SDR being a basket of currencies, and there are really no limitations. There's, I think, 5 or 6 currencies in there right now: the dollar, the Swiss franc, the Japanese yuan became part of that in 2016, I think, 15 or 16, the euro, and the Swiss franc and the Canadian dollar. But that basket can be expanded to include every currency on the planet. And so I personally think that the SDR will become the new world reserve currency. They recently issued more than they ever have in the lifetime of the fund. And they are basically the lender with the cleanest balance sheet, because unlike the rest of the currencies that have to create debt in order to create money at this point, they don't. It's a basket of currency, right? And actually, when you look at the new test that they're running with CEs, which is currency exchanges and multi-currency exchanges, it just makes a whole lot of sense. So they have one universal currency, and then all the countries would have a local currency. And what that would mean to us in the United States with the world reserve currency, the IMF created what they call a substitution fund. And that means that if you're a government or corporation, what have you, and you're holding dollar or dollar denominated assets, you can deposit them in the substitution fund. And then the IMF would automatically convert them into the equivalent SDR or SDR denominated assets. In theory, it makes some sense, because then they could regulate the speed that the dollars come back to the US. But in practice, it's never been done before. Really, who knows? But yeah, I think it'll be a basket of currencies. I don't think one country is going to hold this title anymore. And here in the US, we're going to feel it the most because we've had the greatest benefit for it.
Yeah. Very fascinating discussion. There's a great book I read was called Currency Wars.
Yes.
Exactly what you're describing. And I think the most recent especially when Russia invaded Ukraine, they got kicked off the SWIFT system.
Yes.
That just showed other countries how dependent people are on our framework, and they're doing everything they can to try and get off of it so that they don't get sanctioned or whatever.
Exactly. They've weaponized money, they've weaponized energy, but we're going to still have a ground war, right? They don't really need to have a ground war, but that's what catches people's attention.
Yeah. Next thing is they'll probably weaponize food, water, shelter,
Believe they already have.
and climate change is what's going to kill us all. Artificial intelligence. We don't really see a bright future for us, but hopefully we get ourselves out of this.
Chris, this is the way that I look at it. There always is opportunity in crisis, right? It's not like the whole world is just going to boom, explode, and evaporate. We will live on. For someone like me, something that's really critically important is a legacy. Because if we don't establish a real foundation of wealth and money, but if we also need to be as independent and self-sufficient as possible. So as you said, it's food, water, energy, security, barterability, wealth preservation, community, and shelter. And community is why I do all these interviews, because the more people that understand what's happening, the more people can make choices that put their best interest first. And the opportunity that presents, if you're holding your purchasing power intact, right now, in fact, I just did a piece on this, but right now you have, for example, real estate prices that are still at nosebleed levels, right? It takes the income of $107,000 to afford the median price house. And you only have 13%, or no, as of recently, 15.9% of the population that makes over $100,000 a year. But real estate is here, valuation, gold is here, because a rising gold price indicates just failing currency. That's going to flip-flop. And what's going to trigger that flip-flop is the loss of confidence that the public has in these establishments, in the IMF, and not so much the IMF, because who knows who they are, but the central banks and the governments. And confidence has been declining like a lot. And I've been watching first in 2008, interbank lending. So bank confidence to banks evaporated. And there's a whole another, I don't know how much time we're talking, but there's a whole big thing about that, which is also critical, LIBOR and SOFR, et cetera. But it was bank to bank confidence that was lost in 2008. In 2015, there was the central bank to central bank, the Swiss surprise that shook the confidence of the central banks. Back in August, when the Fed kept promising a 50 basis point raise, 50 basis point, and then they did 75, the markets realized that they can no longer bank on, so to speak, the central bank. There's only one more piece of confidence left, and that's the public confidence. And this rapid inflation threatens that.
Yeah.
Okay. But there are opportunities that will present when this piece flip-flops, and it always 100% of the time does, because in order to get that confidence of the public back, what governments do and central banks do is they take the currency, which has zero intrinsic value, right? And they revalue it against gold, which is the primary currency metal, and it's all intrinsic value. And it isn't all intrinsic value because I say so, because who am I? It's all intrinsic value because it's used in every single sector of the global economy. Medicine, financial, art, food, manufacturing, on and on. So that's why gold has never, ever gone to zero, because it's got the broadest base of buyer. I never hear anybody talk about that, and that's insane to me. Because when you're looking at a market, you have to have buyers for every seller. And gold has it because it's used in every single sector, sometimes more, sometimes less. So you would get a normal supply and demand movement in terms of price, presuming we weren't being manipulated by all the paper gold and silver out there. But there's been a shift that's been happening and a decoupling between the paper gold price. So the spot gold price, you turn on the TV or you look on your computer and it says spot gold is whatever, 1776 or whatever it is. Those are contracts. Those aren't physical. Where you see the demand shift in the physical is in the premiums, which have grown. So you may have spot at 1776, but you might have to pay $2,400 for that coin. People will go, oh, no, I don't want it. You're out of your mind because it's so far below its true fundamental value, which right now is somewhere north of 15 grand per ounce. But if you don't understand that, you don't know that, you're just believing Wall Street. Why would you believe them? Why would you believe these central banks? Why would you believe the government?
Yeah. How can people contact you, follow you, visit your website? It's a very interesting discussion.
Thank you. I produce a lot, and you can find me on YouTube, and you can either search my name, Lynette Zang, or ITM Trading. And we also have a great website, itmtrading.com. But we recently opened a new website called Beyond Gold and Silver. And on that, and in the spirit of helping people be as independent and self-sufficient as possible, we look at all the other rest of my mantra pieces. So the food, water, energy security, barterability, community, and shelter. And we also do a little bit on wealth preservation there. But I'm easy to find.
Yeah. And for all the audience out there, Lynette's resources will be in the links and show notes. Be sure to follow her and check out our website. And thanks so much for coming on for the show.
It's been a pleasure.